So let's first look at the big picture in terms of the revenue. The tobacco contribution is coming down, other businesses are moving higher. The tobacco business contribution is less than 40% now. As the chairman of ITC, are you satisfied with this kind of a diversified mix, or you need to bring the tobacco revenue further down as percentage of the total kitty?
So, you see, you're right. Our non-cigarette revenues are about 2/3, and non-cigarette EBITDA is also now 28%. It is becoming significant. And all these are growing faster than the rate at which the overall company grows. And today, 80% of our capital employed is actually in the non-cigarette sector. So that's where the investment is. So from our perspective, it's about providing industry leading performance in each one of the segments. That is the objective. It is about leadership in every segment, not merely because of size, also on account of product or the services. We want leadership. So where we are already leaders, the idea is, can we progress further? Where we are not leaders, we need to become leaders. In some of the newer businesses, some categories, we may not be leaders. The idea is to become leaders there. So that's the way we look at it. But because the opportunity and our investments are lying towards the newer segments, naturally over time, I think they will grow faster. They will occupy a bigger salience in our whole kitty.
So, Mr. Puri, when the FMCG business of ITC was incubated, everyone said the cash flow of the cigarette business is going into a low margin business. And if the FMCG business is demerged, the ITC tobacco business will be re-rated. But do you think in the future, FMCG business, the fact that it has got incubated, would actually add more value to the shareholder rather than dragging the return ratios down?
See, FMCG is a sector that has got immense promise in India. Given the per capita incomes, given the penetration level, we've got immense potential. We have in fact crafted a portfolio, and we are building a portfolio where there is huge headroom to grow. Analyst points out that we have the largest addressable space of 5 lakh crores by 2030. That's in what we have. But as we go along, we will add more things also. Right? So it's a continuous process. So there is huge headroom to grow there. And it's a business that we have into in many spaces. Foods is our largest space. We are also into stationery. We are also into agarbattis. We are also into personal care. So there are many dimensions of growth we have here. And we believe that this will be certainly be a lot more value accretive with passage of time. We have seen in the last medium term itself that not only has today our size is 1.5x of pre-COVID. Over a medium term, our margins have expanded by 770 basis points. ROCE has gone up by 1,340 points. And we are not there. We are not done as yet. The journey continues. We believe that we will expand margins by, aspiration is 100 basis points every year. So there's a lot of opportunity there. And we have laid a strong foundation with our trademarks, with our innovation capability, with our digital capability, with our distribution highway. We have not really tapped the potential of exports. We've just started in the short term to put the distribution apparatus in place.
So some of your brands can actually be exported, the one which are made in India.
They're already exported to 60 countries. But the headroom to grow is huge because it's early days.